The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 13th magical and marvelous Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope each and every one of you had a wonderful, fantastic, extraordinary weekend. Let's make sure that we do the same this week, and let's make sure that we have a marvelous Monday. Of course, the easiest way to do that is to make sure that you and I recognize that life happens for us, not to us. That's right. When you and I, we make that little 2x4 shift out there, it means that we can find the gift in every set of circumstance that life is going to throw at us. That's really the role of the markets, just as it is the universe out here. We've got bulls, we've got bears. You and I, we can go on a safari hunt. We can go looking at both of them. In fact, each time we trade anything, we need to look at the bullish side and the bearish side of the trade. So feel free to give me a call at 877-927-6648. I'm absolutely grateful for your presence here today. I'm here to serve you. Of course, internationally, you can also reach out at 727-445-1044. It is Marvelous Monday. This is the Hotel California Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got Dow futures trading off about 30 points, trading out at 17,942. S&P futures up about 3.5, trading at 2,092. Russell off just slightly. NASDAQ futures are flat. King dollar on the move this morning, up 339 ticks, trading out at 99.93. We've got Goldilocks, which is flat, trading up $1.40, trading at 12.06. Silver up a penny at 16.40. Light sweet crude up 2.5% this morning, up $1.27. She's trading out at 52.90. Natural gas up about 0.7%. We know that seasonally speaking, it should be finding a bottom out here. That meaning natural gas. A quick peek across the globe. Let's go see what we have going on across the universe. How about that universe over in Asia last night? Man, oh man, that Hang Seng up another 743 points, closing above what I was curious whether or not this was a bad tick or not. And apparently, whether it was or wasn't, it was not a bad tick. That was the April 9th day. Now, the April 9th day, just to give you some perspective, at a point in time during the trading session on April 9th, the Hang Seng was up 1,600, I believe it was 1,685 points off of the close. Just off of the close of the prior day, April 8th, which had like about a 400 and some odd point move out there. 2,000 points, basically, in a period of just a couple of days out there. Look, this is strong as a bull out here. You've got to close above that high from April the 9th. What does that say? You know, it says that price is headed up to the 28,821-ish type level as its next move. Shoot, that's only 800 points. It can do that in a heartbeat. You know, yesterday's heartbeat, last night's heartbeat, that was, what I say, 743 points. So most certainly he can do that in a heartbeat. Blow off top? No, I don't think so. Out here inside the Hang Seng. Let's just put this on a monthly basis out here. Take a quick peek at the monthly chart. And, you know, the Hang Seng has been, in essence, been consolidating for a long period of time. It's taken out its B point of an A to B equals CD. That was the swing from November of 2010. If you go from high to low, of course, you know, I can't control what the markets are going to do at the next moment. But as we speak right now, this thing is even above with a wide-ranging bar on a monthly basis. Hey, it's only April the 13th out here, but you've moved into the 0.786 retracement level with a wide-ranging bar. You're also inside of the swing point that takes you back into the November 2007 level. And what that says is that very likely the top is going to be tested, and that top is 31,897. So I would say there's certainly no bearish signals out here. When I take a look at this Hang Seng, when I take a look at what the chart pattern, when I take a look at the candle, if you take a look at the monthly candle, strongest monthly candle that the Hang Seng. Now again, it's only April 13th, but as we speak right now. And I like to take a look at the strength of, the strength of a candle tells you a lot about the market. What I can tell you is if the candle were, if we were to see if today were April 30th, I suppose, I don't know if that's a trading day. But if it were, I will tell you that markets do not end on wide-ranging bars like this. This, if you take a look at candles from 0 to 10, with 10 being the strongest, this is the strongest style candle that you can possibly get out there. So you're inside a swing point, just like if we take a look at our NASDAQ, and to just put it in perspective out here. And the question was posed in the den, so thank you very much for that. And if you just simply come back and you take a look at the NASDAQ composite, let me do that for you. We'll just keep this chart out here. We'll stay in the monthly charts out here. And the NASDAQ composite, remember when price got inside of this swing point from back in 2000, that's the blue line going across my screen of 43.55.69. What that did is, anytime you close, anytime price is inside a swing point, the message is whether it's volume or not, doesn't matter. The message is, as long as you stay inside there, that you very likely are going to go test the high or the low. In this case here, the market was moving higher. So it says very likely you're going to go test that high, 51.32.52. In our case here, for the NASDAQ, what we know, if we put that chart back up on our screen out here, $COMPQ, let's see if this pops up on my screen. The red lines, by the way, that you're looking at on my screen, if you're watching us on TigerTV, those are the horizontal trading range boundary lines. They often act as solid lines, often act as significant areas of support or resistance. Well, in this case here, the magic number that we're really watching is, and the monthly chart is 5,082. If we see a close above 5,082, that says that what the NASDAQ composite wants to do is actually run up to the 5830 level. Now, we'll take a look at because these lines here, what they're doing is they're taking a look at opens and closes of because the body of the candle is truly the essence of price. The wicks that we take a look at inside a candle, those are nothing more than the extreme emotions out there. And that has some meaning. So we look at the body of the candle in order to be able to identify these horizontal lines. Now, a monthly candle is going to close or have fewer closes than weekly candles. And those closes are going to be different. Only once during the month can the week. Well, not even true. I can't even say that, because only if the month ends on a Friday, the way that these data feed systems work, they don't let you start that with the beginning of the the beginning of their week is Monday through Friday. It's like a work week. It doesn't take a look at the weekly candle. If the weekly candle, if the month ends on a Wednesday, the weekly candle is not going to be till Friday close. So you can see that the bodies of the candle. We take a look at some of these horizontal trading range lines out here, they're going to be different depending on the time frame that you are looking at your charts out here. If we if I take a look at this chart just as an example, for the composite, let's put the weekly time frames out here. Now it's going to be easier for me to go drop down to a weekly time frame. Otherwise, it gets too cluttered on the screen out here. So there we go. We've got a weekly. You can see that 5108-ish area to what did I give you? Somewhere below that. That's going to be some really significant area of resistance. So the level I'm looking at, because the weekly number is above the monthly out there, as far as the horizontal trading range, any close on a weekly basis about 5109 out here. The actual number comes out to 5108.92. But let's not split hairs out there. Any close above 5109, especially if there's any kind of significance, price is going to want to go ahead and gravitate up towards that next level out here. And the next intermediate term level would be the 52.99 type area. In fact, let me see. I don't know. Well, let's see here. The symbol that eSignal uses for the Shanghai. Let me see if I can. Sometimes I can do it this way. Let me see here, because we can take a look at their horizontal trading ranges as well. So let me put up, I'm sorry, it was the Hang Seng. I got to remember $HSI-HKG. Let's see if I can do it this other way, though. HSI, HKG. Let me see if they'll pull up this way. There we go. So now let's go ahead and see what kind of, now this is the weekly chart here for the Hang Seng. And I'd have to make some potentially during the break or something, some slight adjustments out here. But as far as these dash lines out here, more so, I have a tool that allows me to adjust the filters on this. Where I can take a look at the number of co-located opens and closes. Those are the numbers where I've got dash. If you're watching us on Tiger TV in HD, it shows, for example, 13,025.35-20. What that tells me, that 20, is there's been 20 occurrences right around that price level within a small little area. Small little tolerance is what I should say. And that's the price area where there were the largest number of co-located opens and closes out there. In any event, I won't bore you with the math out here, but the question is, was this a blow off top? And I think the answer there is no. When we take a look at the daily, the weekly, the monthly candles out there. In any event, that's a lot of time spent on the Hang Seng. But still, the thing is that when you and I, when we take a look at any chart out here, the chart patterns are the chart patterns. And that's really the what I try to accomplish for you during a 2-hour period of time. Always step up to the mic, regardless of what trade I may or may not be, and what is the message of the markets as we speak right now, and not step up to the plate expecting a certain pitch to be thrown at you. If you do that, now not that you don't want to anticipate things, but boy, you got to be able to take what the market is giving to you. In sports, take a look at what a great Masters tournament, even though it was somewhat of a hey right out of the gate. You got Jordan Spieth just taking it home. But look, there were points in time during that tournament where if he was not present in the moment, right? If he was thinking about the next hole or the next shot, or let's face it, if he was a prisoner of his past and he was thinking about the shot that just got him into trouble, what do you think? The whole idea is let your first mistake be your worst mistake out there. And although I did watch these guys, they would hit it into the pine straw, into those pine trees out there, and they would find these windows. Now, I don't know about you, and it almost doesn't matter how good of a golfer you are. I don't know about you. You've had this experience. You might see that window, take the shot, and then boom, hit it right off the tree. And hopefully, it doesn't come back and hit yourself or somebody else, and get a penalty out there. But what a great, golf tournament over the weekend. In any event, let's go back. So with regard to the markets out here, Hang Seng, super move to the upside, taking out swing points inside the swing. From inside the swing from its highs out there. So it says it wants to go up and tag those highs. If we take a look at here is the Shanghai. Shanghai, strong as well. Maybe not as strong as the Hang Seng, but certainly strong enough to want to get up to the 46.41 level. You're at 43.18 as we speak right now. That 46.41 is nothing more than the 0.618 retracement level. If we take a look at the Nikkei, no big deal. Last night, basically unchanged, off a couple of points out here. If we put the daily chart on our screen, really just simply no big deal out here. We've got 2A to B equals CD patterns that this is trying to at least complete and get up to at least 20,120 out there. Of course, it did just briefly get above 20,000 a couple of trading days ago, got up to 20,006, but it wants higher price as well. If we take a look at what's going on over in Europe right now, the DAX is off about 18 points. That's really no big deal. Here's the daily chart out here for the DAX. Quick look at the FTSE. What you and I both know about the FTSE is that the FTSE closed above 69.50.60, and it did that. On for the week. That's a beautiful thing. Hey, this is Steve Rhodes. This is TFNN. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. No real significant changes here in the futures market, our futures market. So we'll get to that here momentarily. We left off taking a look at the FTSE. Now, in the case of the FTSE, let me put the weekly time frame up here for you to take a look at. The yellow line going across my screen out here, the horizontal line, 69.50.60. It's an important line of demarcation out here when taking a look at stock patterns, because it is the actual highs from back in 1999. To be specifically, looks like the week of December 27th, that high was at 69.50.60. Yeah, so that's the high. So the FTSE finally taking out those highs. Now, what's important about that when you take a look at the FTSE specifically is you can see it basically is in about a little over, like a 3,500 point consolidation or so. The consolidation line, we can say it's probably right around here, 3,500 to 69.50. So about 3,500 point consolidation. That price has been traveling in since 1999. So very much like the NYSE. Out here, when you break a consolidation pattern, see, the cool thing about the patterns that, at least I think the cool thing about the patterns that you and I look at here each morning is that it really doesn't matter what time frame it is that we trade. So now this happens to be a weekly chart, but if we were looking at this consolidation pattern on a shorter time frame, what you and I would know is that what's likely to happen, the preponderance of evidence, and it's a significant preponderance of evidence, when a market breaks through a consolidation, to the upside or the downside, especially a long one like this, that you price is likely to make a measured move. It's equal to or greater than the consolidation area. So in this case here, I'm just rounding, but it's about 3,500 point move out here. As long as the FTSE stays above the 6950 level out here, the more times it comes back and tests it and reject it, much like you would with a swing point, trying to move into a swing point, doing it with lighter volume tells you there's not enough buying or selling that's going on out there. And that has some meaning. As long as the FTSE is able to stay above 69.50, 60, that's very impressive. Tells you there is a lot higher price. There's about, over time, 3,000 some odd points. Hey, look, in our own New York Stock Exchange, there's over 6,000 points worth of consolidation that it has in this move. Now, that's over the longer period of time. We know that things don't go straight up. They don't go straight down. Likewise, when price comes back into the consolidation level, that's when you have to say, uh-oh, there's some problems, potential problems in River City. Sometimes when you come back into that consolidation pattern, it is a false breakout. And then it says that price can actually make its way all the way back down to the bottom of the consolidation. Does it have to do that? Look, these are just simply areas where you take a look at elevated, we take a look at floors, we take a look at prior swing points, we take a look at trend lines. We use whatever tools it is that we can with regard to the patterns that are unfolding to always help us identify levels of support and or resistance. Hey, in the case of the FTSE right now, it's got no resistance to speak of. No resistance whatsoever because it's at all-time highs. Now, today it's trading up a little bit, but basically it's at all-time highs out there. So there's really no left side resistance for it to deal with out here. So that resistance is just going to have to show itself in some other form or fashion, which could be a candlestick pattern out here. It's why the question that was posed, hey, is a move inside the Hang Seng a blow off top? Right now the preponderance of evidence says no. It most certainly is not. The move was real. Can you imagine? Think about this. Well, let me pose it the other way. If the market had moved down 1,685 points in the Hang Seng and you were short, what would you be doing? You'd be licking your chops, right? You'd be saying, man, this market is getting ready to fall apart. I think most people might be doing that. So, or would you be saying, hey, that's a blow-off bottom out here? So I would say most people would be licking their chops saying this market is croaking and it's moving to the downside. Well, why shouldn't we have that same approach, that same thought process when the market is breaking out like it did? 1,685 points. That's a big move. That's a huge move out there, just to be followed up now as well as it did here overnight, last night, this morning, with another huge move out there. So, hey, maybe it's getting a bit extended or something, but it sure does look like it's got more upside to run, as well as the FTSE. Now, if we could take a look at our markets out here, our markets have been lethargic and tired. We've really been taking a look at this, over the course of this past quarter, since January 1st. The markets have done very little. The U.S. markets, the worldwide markets, whole different case out there. And as we're seeing right now, our markets here, they've got the RSVP. I know they responded, but for whatever reason, they aren't being let into the party. They're not being let into the door. Right now you've got the ES Mini trading at 2,093 out here. The ES Mini is trading into its most recent swing point, this little shooting starish style candle back on March 23rd. So as long as it stays about 2,093.25, you're right now you're at 2,093, so it's not exactly above it. It says it wants to at least go test those highs out there, but it needs to get some get up and go. It needs to get some real machismo behind it in order to make those moves for their highs, which is February 25th. I'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 20 points, trading out at 18,078. The S&P looks like it's up 2 points. That's trading out at 2104. The composite's up 13 at 5,008. Russell up 1.5 points, trading at 1266. DAX back $11. FTSE up 20. Gold is up off $3 right now, trading out at 1201. Silver off 6 pennies. Late sweet crude up $1.17. Leading the charge, the upside this morning is Netflix. Netflix up $19. Whoa, Netflix is truly on the move. Let me see where they are with the numbers here. Or was there something else going on? Netflix here. Yep, I don't see what's going on there, but up nicely, up $19. Clovis Oncology, CLVS, the ticker symbol, up 12.5% this morning, up $9. See if there's any kind of earnings. We are in earnings season out here. So, and then my apology, folks, I'm having some major system problems out here. So I'm just trying to keep things glued together during the next hour and a half out here. I rebooted everything late last night to make sure I had a fresh set of everything, but something seems to have gone awry about 15 minutes before I went on to the show. In any event, Qualcomm, QCOM, that's up 3% out here. United Healthcare Group, UNH, that's up a couple of bucks. Perigo, PRGO up $1.80. Under Armour, maybe as a result of the advertising they had during the last 4 days at the Masters with Jordan Spieth winning. Maybe that's the reason why Under Armour is to the upside. Apple up about $1 right now. To the downside, LinkedIn. LinkedIn is off $2.85. Now, I think LinkedIn has had some pretty strong sessions. Yeah, last session was a nice big gap up with some big volume out there. So LinkedIn doesn't look too shabby out here. Cena Corp, that's off about $1.44. Las Vegas Sands down $1. BHP Billiton off $1.20. Kraft Foods up 95 cents. Union Pacific down 62. So that's what's going on in the markets. Let's go take a look at the currency market. So try to get a feel for what's going on here as we take. Let's start off by taking a look at the euro compared to the U.S. dollar index out here. So with regard to the euro, the important touch points here with regard to the euro are going to be 1.0619. That's the top of the swing point. And that's the swing point low, the most recent swing point low inside the euro. Take a look at its daily chart. That takes us back to March the 16th. So the top of that swing point, and what the euro is trading with inside that's trading underneath that. It's also trading above the bottom of the swing point, which has not been tested, 1.0459. Now, in this case here, just like when we took a look at the Shanghai, the Hang Seng, let's take a look at any of them. When price trades inside a swing point, it says there's gravitational pull, either to the upside or the downside. Price is moving to the downside. So long as price stays below 1.0619, the preponderance of evidence says that 1.0459 will be tested. Now, what happens if that level gets broken through? That's what sets up your A to B equals CD pattern. You break a swing point out here. I don't know if we're going to set that up or not at this stage. Right now, it looks like the euro wants to trade lower, wants to go test at 1.0459. If it closes back above 106.19, then you can say that the testing to the downside is done, and maybe it can run up to the 110-ish type area. But at that stage, that is not the message that we have. Likewise, we've got the euro Japanese yen out here. Now, in the case of the euro Japanese yen, it has tested the bottom of its swing point. So this is an all-important session, or the next several sessions are important out here, because the swing point low inside the euro happens to be the euro-yen currency pair. That happens to be March 13th, and that low is 126.91. We have seen that level has been tested, so far rejected. If this is forming a bottom here, you should see some type of bullish reversal signal, some type of bullish candle stick out here. We don't see that as we speak right now. We do see that it made a lower low, and it did it with less relative weakness out here. That's always a potential for the rubber band to stretch too far and it's getting ready to snap back. Now, we're not there yet. I don't see the total sign. That's the most positive thing that I can find about the market, is that the euro yen is making lower lows, which is never a good sign, but it is at least doing it with less relative weakness. If it was doing it with some real strength, more relative weakness on the way down, that would be a bad scene. It's not that this can't turn into a three-car pile up and crash out here. I'm not even sure where that came from. And it will. In fact, it'll turn into a head-on collision if it actually closes below 126.91 out there, and you start to see some real push down with regard to the internals, with regard to its weakness. We don't have that as we speak right now, so that's also going to be important for us to be paying attention to. If we take a look at the Great British Pound out here versus the U.S. dollar, a Great British Pound has broken through that all-important trading session from March 18th out here. Let's go ahead and put the line across the sand out here. Now, they're just slightly closed below that level. That was back on Friday's close. An overnight trading, and as we speak right now, we're seeing that level try to hold as support, 1.4635. If you can get back above that level, and then you've got this continued consolidation pattern to go on. If it breaks below that area, which should be a strong area of support, all of a sudden it may be becoming a strong area of resistance. That's in the Great British Pound out there. So that's what's going on inside the currency. Well, let's take a look at the Japanese yen. No real movement here this morning. I should say from high to low, there's been quite a bit of movement. But as we speak right now, with the body being the essence of price, the body of the candle being the essence of price, not a whole lot. Still looks like the Japanese yen wants to make a run for 124.50. But the first run that it's got to make is got to get into that 122.02 level, and that's the March 10th swing point. It's not been able to test the bottom, not been able to, certainly if it hasn't tested the bottom, that means it's not gotten in there, so it could not test the top. So that's what's going on inside those currency pairs. Let's go take a look at Goldilocks, see what she's doing. Down $3.40 as we speak right now. Gold here, really struggling. Should be able to have catapulted over that B point from March 26. It has been unable to do that. That price point was 1220.40. If it could do that. Originally, when the pattern was forming, as we took a look at the move on April Fool's Day, on April 1st out there, a nice wide-ranging bar, a nice bullish reversal signal here. The way that it was coming off of that C point was suggesting to me 1304.40 was the likely move. Now I say not so fast. Not so fast at all. It looks like gold is losing its luster out there. So you get out there, those of you who are bulls in gold, get out those rags, get out that secret sauce and polish it off. It needs to see some additional wide-ranging bars as it moves higher. Otherwise, 1256 to 1277 becomes mark. In fact, what I would more likely say gold is now doing, it's just forming a Gartley sell pattern. Gartley sell pattern, let's take a look at that from top to bottom out here. The Gartley sell pattern, let me see if I can do this. Let me get rid, I thought I had this changed, so I was going to show yellow lines out there. I don't know why it's not, but hey, let's face it, it's not. The 0.618 retracement level, I can see where that comes in. That's at the 1245, and your 1-to-1 A to B equals CD is at 1256. So any move by gold, then I suspect that it will be able to get up there. But if it's just doing it with small-bodied candles, what gold is actually doing is setting up a Gartley sell pattern. Somewhere between, we'll call the price point, it's somewhere between 1245 to 1277. So you're right in that range is where gold is likely to find its next top out there. And I suspect, whereas I had been very bullish on the chart patterns last week with regard to gold, the earlier part of the week. Now the action here is definitely saying not so fast. That can change in a heartbeat, but right now the heart that is beating is saying, likely not going to see that 1304 level out there. If we do, that'll be really amazing. Not that it'd be amazing, but the chart patterns are suggesting that it'll be pretty amazing out there. So that's what's going on inside of gold. If we take a look at silver, it is flat this morning. It's off a nickel. No big deal, but it's up a nickel, but it can't get off the dime, so to speak out here. Now, what silver did do is at least it came back to the breakout area. That's a wide-ranging bar. That was from the trading session of March the 20th. It's made a 0.618 retracement. This area ought to hold here. On Friday, there was a real opportunity for silver to have given us that nice bottoming candle. It did actually form what's called a piercing candle out there, but it had the opportunity to form a bullish engulfing candle. The two candles significantly different with regard to meaning out here. We're not seeing any real follow-through inside of silver today, so now it also becomes suspect, but I suspect that this area here holds, and we at least see a run for the 1740 level out here. But silver's got to get some giddy up and go in order to get back to its highs, which now I'm a little bit less certain that that's really what it wants to do. So it needs to give us some more information out here, and much better information than what it has been providing to us. That takes care. Let's go take a look at light sweet crude. What is the black tea doing out here? If we take a look at light sweet crude, this actually, chart pattern-wise looks a bit stronger than gold or silver. But 55.50 is likely the extent of its move. That just a 1-to-1 A to B equals CD gets you back into these most recent highs back from February 3rd as well as February 17th. That probably becomes and what we can see here is that you've got a nice consolidation pattern that in essence is unfolding out here inside of light sweet crude from 45 to 55, so a 10-point consolidation. So what that tells you and I is the following. If, in fact, you can see light sweet crude close above, we'll call it 56.07 out there, there's a good chance that what light sweet crude will do is run to 67. Otherwise, just expect that to basically be the topping area inside of light sweet crude. Let's take a look at, so you've got the Dow's up 43, S&P is up 4, composites up 23 points. Let me see, check in on the New York Stock Exchange. Let me go see what it's doing price oscillator wise out here. Price oscillator wise, yeah, just moving sideways. So a bit of a struggle inside of the New York Stock Exchange. VIX index here, trading out at 1274, trying to get above this level here, 1250. Well, it is above it. 12, what's that low? 1259. It would do itself real justice to stay above 1259 out there. Let's go take a look at some stocks here moving in the marketplace. Netflix. Let's go check in on Netflix. Big move this morning, up $16, up 3.5%. Let's go see what kind of volume we've got behind the move out here. Now, Netflix had a strong leg bull move back on January 21st out here. Wide-ranging bar, accelerated volume out there. That's when these gaps are your friends. Price was not even able to get back and test what you would have liked to have seen, the breakout gap, the bottom of it, which was from January 21st, that low of 401.87. Unable to do that as price got down there. Light volume, 1.4 million shares versus 9.5. The nice big old bullish engulfing candle on April the 6th. Now you've seen price, in essence, gap up into about the 0.618 retracement of the move off of the highs from February 26 down to the low of, I've got to adjust it. I was using March 27th, but really the low is April the 6th out there. That 0.618 retracement level in the 457 and change area. When you gap up into a retracement level like that, it takes a lot of energy to do that, but it doesn't say that the move is over. Instead, it says you're likely to see a move to the next floor, that next floor being 470, the next ceiling, we'll call it maybe the next ceiling, 470 and change out there. That is in Netflix. Volume today, 957,000 shares. If we take a look at Clovis Oncology, CLVS is the ticker symbol, up 13.5%, up $10. So a nice move here this morning. Volume of 551,000 shares out here. This is taking out a swing point from March the 17th. That only had 450,000 shares. So you've got a confirmed A to B equals CD to the upside inside of Clovis Oncology, CLVS. Now that A to B equals CD pattern, that's going to give us a price projection by starting with the swing here from December the 1st as your A point. Your B point is March 17th, and the C point of that lightning bolt, April the 6th. So that gives us a move here, a measured move of 106.36 as the target. I'd have to say more likely 116.69 inside of Clovis Oncology. Let's put this back on a longer term. Is this thing at all-time highs? It is not. So what it's really going to also try to do, let's see, at the all-time high for this is going to be 93.33 out here. So back to the daily, 93.33 is going to be an important mark for this thing to get above. If it can get above 93.33, then that A to B equals CD pattern that we're looking at, which would take it to 106.36 to the 116 level, that's what should unfold. So key level here for Clovis Oncology. We're not there yet, but it is headed up towards that area. Also moving to the upside, we've got Athena Health, ATHN is its ticker symbol, up $3.70 out here. Gapping up this morning, giving back a little bit of those gains, running into resistance of this trading session from March the 20th. That had 354,000 shares, but it's done 126,000 today. Looks to me like the work to the downside in Athena Health looks to be over. And that was the test of this high volume swing point low from back on October the 17th out here. Never got down to test the bottom, tested the top of that candle as it had done previously back here between November 20th to well, let's say when it took off on December the 8th out here. So looks like Athena Health now still in a bit of a downtrend out here, but it does look like the work to the downside in ticker symbol ATHN may be over with. Also moving to the upside, we've got Builders First Source. Now they're out with numbers here. Oh no, they're going to acquire ProBuild. Maybe that is what's moving this stock. Dow's up 33, S&P is up 3, composite up 21. This is Steve Rhodes. This is TFNN. Right.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 35 points. It's trading at 18,092. S&P is up 2106. Composite up about 22 points out here, trading out at 5,018. Let's check in on the S&P futures. Let's go take a look at the 30-minute chart for that. Let me show you this pattern here that is unfolding now. When we began the show, we were taking a look at those horizontal trading range boundary lines. We were taking a look at it inside of the composite. We looked at it a little bit with regard to swing points inside of the Hang Seng, the Shanghai out here. Going across my screen, this works again on all time frames. If we take a look at the last 1,600 bars inside the ES Mini on a 30-minute chart, and I go ahead and I get rid of, in order to use the bodies of the candles, I go ahead and get rid of the time period from the opening of the new contract in the evening. It's at 5:45 in the evening, all the way through about 6 o'clock in the morning. So I cut out. Now, not that there can't be some movement, but a lot of times there's not a lot of noise during that time period, or the noise starts. Sometimes it'll start maybe around 3 o'clock in the morning, 4 o'clock in the morning out here. But I've cut out a lot of that noise out here just to give us some good lines. We know as we take a look at this ES Mini chart, this 30-minute chart here, we saw that nice little descending price channel that was holding as resistance. We saw a break above that with a nice wide-ranging bar that was back on April the 6th. Price stayed above that. Right now, price has gotten above a very significant level of resistance. That's that dashed line. 33 occurrences during this last 1,600 bars on a 30-minute time frame out here. What this says is this 2,095.75 level. It says 0.64, but you've got the increments of a quarter out here, so you can't actually hit that. So 2,095. 50 is what we use, or 75. Either one of those would be the numbers we would look at. As long as ES Mini stays above that level, that offers higher price. And that says 2104. That says that the ES Mini gets back and tests its highs from March 23rd, so it's above that level. If it can break above 2104, that says you got 2113 moving at you, and you've got A to B equals CD patterns. That certainly would provide you with that. So, well, folks, stay tuned. Thanks so much for joining me here on Magical and Marvelous Monday. Stay tuned, though. Hour 2 of the Trader's Edge. That'll be up in about 10 minutes. Stay tuned. Tom O'Brien will be up with his market update. And you're off to start your day. Have a great one. Look forward to seeing you tomorrow. Take care.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.